Hey there, traders. This is Christian from Hertz, Tribeca Trade Group, with your end of day recap for Tuesday. And a little bit of a interesting day, tricky day, I would say. We started the day down. Futures were down. Europe was down. And we saw a little bit of a intraday comeback, especially with IWM. IWM really caught a bid today. There was a couple of things going on there. Also, oil got a bid in the middle of the day as well, and indices started to float up. And then we saw some sellers come in, especially in the FANG group. We saw a few of those names, a few of the tech names, kind of come down pretty hard end of day. So kind of unusual. I would have thought that that would have happened in the beginning of the day. We just didn't really see a lot of volatility in the beginning of the day. Once the market opened, that was my little that was my little crystal ball prediction, was that we were going to see a little bit of volatility on the open, and I thought that's where the selling pressure was going to come, not at the end of the day. So let me just go over the indices and kind of give you a little bit of a levels to watch. S&P, still moving down here, but still above the moving averages. So, I think this is expected. I talked about this in the trading room this morning, that I would think that buyers will kind of sit on their hands until the Comey investigation is over, and kind of get your, as everybody's saying, get your popcorn ready for Thursday. But it really wasn't the case today. There wasn't People weren't sitting on the sidelines. There was a decent amount of buying going on in individual names. A lot of the chip names once again saw activity. AMD, which we talked about the AMD weekly call buyer yesterday. Wow, AMD, what a move today. So if you went home yesterday with some of those weekly options, those I think were good for a double today. So you had this whole move up here on the first hour or so of the day. You could have cashed out right here. I mean, it actually went a little bit higher here around 1 o'clock, but and didn't even get that smackdown that a lot of the tech names did. So real nice move. We talked about that trade yesterday. Well, somebody bought, I think it was around 19,000. I'm going to say offhand, of the weekly options. Yeah, 19,500. Good memory I've got. 19,500 weekly options. So they knew something was up in that name, and AMD was up 7%. So what I wanted to talk about in the major indices first, and then I'll go over some individual names. But this was so two different levels to kind of watch today. Now, I didn't think that this big move down was going to happen in futures, but we ran into resistance. We found support, and if you go to the 1 hour, this is the most important level I thought to watch all day today, if Thinkorswim would cooperate. So if you go to the 1 hour bar, this level 24.27, I sent this out pre-market because this is where we were right around 7 o'clock in the morning. We held the top of value. So really important once we start the week above value, above this whole zone. And that top of value usually is pretty good support, and so far it's holding. So 24.27. Let's see what we do tomorrow. It's not to say that we can't get in there, but it is a good level of resistance to hold on to. Going back to the 5 minute in S&P, we conked out, we stalled out right at that bottom of value on the shorter time frame. You could see, whoops. Hello. I don't know. I don't know why Thinkorswim likes to do that, but you could see that we basically hit resistance and just didn't want to get into this value area. So, kind of, this is this indicator that we do. I don't really make mention of this a lot because I'm just not a salesperson. I'm a trader, but we do sell this indicator. It gives you the best support and resistance lines I've ever seen before. Every day, it will tell you basically where to take profits and kind of watch your resistance areas and watch your support and know when to hold on to trades. So IWM was the other thing that I thought was interesting today. This one actually was a little bit all over the place. We actually managed to rally into the value area for the 5 minute, and then fell apart at the end of the day. Nasdaq was probably the most interesting. Nasdaq really had that volatility that started to happen right at 3 o'clock, and it was basically a waterfall down. So there was some selling. I mean, you could see the volume here, and if you go one by one, this actually shook me out of a couple of my Amazon positions. I'm holding, or I was holding, a couple Amazon call spreads, which is perfectly fine. There's not much more I could really earn from them, so I'd rather be free and clear of these. You could see my positions, which I don't show you every day because you have to be a member of Tribeca Trade Group, but you could see all these exits. So I'm kind of moving a little bit more to cash. I talked about that yesterday. I'm going to get into why I'm doing that a little bit more in terms of options positions. Cash positions I don't touch. I've got a systematic program that I use for cash positions, and I don't get out until a support level is violated. So I'm not getting out of cash, so don't be confused here. I'm just getting out of options positions because those can really whip around in terms of your P&L. So if we do happen to get a move down, I just think the equities are getting some of the equity areas they may be due for a little bit of a pullback. Listen, as I said yesterday, the market ebbs and flows. We don't just go up straight up in a perfect line. So for me, getting out of some things like these Amazons. I mean, first of all, look at the profits on these. So these are the types of things that we rack up here in terms of profits. These were call spreads I put on probably about 3 weeks ago. Amazon June 950 970 call spread. So here's what I mean. I can only earn $15 on this. There's not really that much that I can earn more on this. I paid $540 for this. It's almost a triple. So really, really big. So you have to know when you're dealing with call spreads and trading, how much more can you really earn out of this? I can only earn 18 cents. Meanwhile, I've made over almost $1,000 on that. So on this one spread, same thing with this one. I got out of this one as well for better than a double. Paid $4, got out at 8.25. Also Priceline. I took half my position off. I took a little bit off yesterday as well, but I mean, $7. I paid $2.80 for this, so that's how we're trading here at Tribeca Trade Group. We want to take. The most I can earn is for this one is another $3. I've got that last piece on to try to achieve that in the next 8 business days before June expiration. Tesla. I mean, this is a trade I just put on yesterday. Paid 320 out for 455. So nice money on that one. Micron, I decided to get out of this one today. I can day trade this. I was only going to hold this one till they report earnings in a couple weeks. So I just saw a lot of weekly short-term put buying go up. So kind of got me out of the last portion of my Micron. And then a couple new trades, which I'm not going to really discuss because you have to be a member of Tribeca Trade Group. But we saw a nice call buyer in NCLH. We saw some calls go up in Intel on Friday. And then I've got my own little trade in Wix that I put on. But again, you have to be a member for me to go through that in detail for you. But man, I mean, I've just been, I'm sorry to say, but I've been crushing it in terms of trading the last couple months, I would say. Really nice so far year to date performance. So where a couple things that have me a little bit alarmed, and it could just be that some of these things are going up because we volatility usually runs up into an event. So we have 2 events on Thursday. We've got the Comey testimony. We've got the UK elections as well. It's typically how it works. The VIX and volatility usually runs up into an event as there's uncertainty. Then once the event happens, there's usually a vol crush because the cat's out of the bag, whatever the news is, right? Once the news is known for 100% certainty, volatility usually comes out. But to me, it just seems a little, maybe there's something else going on here, but you have the yen up 1%, which is basically a safety trade. That's a risk off trade. You have gold, which we talked about gold and bonds yesterday. And about how you can get long these above the 200-day moving average, but gold does shut up like a rocket today, up over 1%, and that this white line, since it's been above the 200-day moving average, I would favor a long in this situation. I in fact put on a trade in GDX, which closed GDX and GDXJ, huge days and huge option buying, call buying in a couple of the gold mining ETFs. However, very short dated buying. So again, could be because of these events. If you look at these are levered gold miners, which somebody's looking for a very, very quick move. Notice they're only going out now a week and a half for Nugget. And the other one, JNUG, which is also 3 times. This is 3 times the juniors. Look, they're only going out this week and next week. So it's not like somebody's really establishing a really long-term position in gold. Somebody's looking for a quick move, a quick jump up in volatility. So again, keep that in mind. They're using the most aggressive levered names, and not only buying the biggest levered names, they're also buying options, which is like super super levered. And they're just doing it for about a week and a half, or even till this Friday. That tells me that they're looking for some volatility going into Thursday. I don't know, maybe something next week, but very, very short term in nature. Nevertheless, GDX is above the 200-day moving average. This is easy. I'll stay long GDX as long as it's above the 200-day moving average. What's the worst that could happen to me? I get stopped out right below the 200. So be it. That's the whole name of the game is, find areas where to go long, find areas where to get into trades, and then have those levels where you would bail on the trade. This way, and this should happen in every time you put on a trade, which is what I teach all day long. Is every time you get into a trade, know where it's not going to work. For me, going long GDX, right below the 200-day the 200-day moving average, I know is where it's not going to work, and I'll get out of it. So you have to identify that, and then you also have the discipline to actually pull the trigger and get out of it. And that's all that trading really is. It's that simple. You just have to stick to a plan, a nice systematic plan, and be disciplined about it. So going into a little bit more depth than I usually do with that today, but that's my plan for this one. Just respecting the price action and forgetting about what events are going to happen this week. So besides that, so gold and then bonds. Bonds also were up. So all the safety areas, and there's been real money that's been going into bonds. If I look at on Bloomberg, which I talked about pre-market in the trading room, but so if I bring up TLT, I think there's been offhand, I think it's $800 million that have gone into TLT just over the last couple of days. You can see these bars. Bloomberg, this is a new feature in Bloomberg. It lets me actually see the inflows. It's something that I track on a day-to-day basis in a spreadsheet, but it's nice to have it in a graphical form. But you could see all the money going into bonds. Same thing with XLP. This is the Consumer Staples ETF, another like risk-off type of trade. Look at all the money. This is also about $800 million over the last week that's gone into consumer staples. So let this kind of cycle through a little bit. That's my plan. I did take a couple new trades today because, like I said, the buying was pretty good in options. Again, these were the trades today. We saw a little bit of Tesla calls purchased in the morning. We saw Nvidia a couple times come in. We saw more AMD in addition to what we saw yesterday. We saw some Apple call buying. We saw a couple other. I should have the NCLH on here. Why don't I see it? Could be I'm just missing it here. But NLCH, which has been another area of travel that's been really, really well bid this year. But we saw a nice call buyer come in to NCLH today. Looks like it actually finished down on the day with everything else that got smoked. So in any event, I didn't put if you could kind of read my notes for the day, I didn't put a huge position on in this because I'm just kind of trading a little bit lighter, but I did manage to already hit a target in it, so I could actually put this trade back on maybe tomorrow, considering that it got what happened to it at the end of the day. So we'll watch that tomorrow. What else? A couple other trades to highlight. There's a little bit of an FTX, and then there's a lot of energy buying today. So I actually put on, somebody asked me about this on Twitter today. Because I mentioned OAS on Twitter, and they said, "Are you getting long? Are you long? Not OAS, Oxy. What a move in this Oxy today." So all of these energy names are in downtrends. I do not want to own them for a swing trade because look at it. It's below the 200-day moving average. It looks horrible. However, there's going to be times where there's going to be a little bit of a squeeze when oil rallies a bit, which is what I did today. So this particular trade, I just trade as a day, so some of these counter trend trades, I will just trade as a day trade, and I will take it off at the end of the day, because it is what it is. It's in a downtrend. So this trade, I put on for I think 76 cents, and I got out of this for $1.10. So I hit targets all the way up, but $1.10, for 76 cents, that's what. I can't do math in my head right now, but that's about a 50-cent profit in one day on an option trade. So, so again, I'm not opposed to trading names that are in downtrends just for a quick day trade. Get in and out of it, not holding the position overnight, and then rinse and repeat. So that's it for today's recap. Thanks for watching and have a great night.